Hey everybody, this is David Skarika. So I'm gonna make this quick today because I got an interview at 5 o'clock. I'm doing this around 4:30, so I'm gonna make this just around 15 minutes or so. Kind of follow up to what I did yesterday. Welcome to the Bahamas, full of flies. Hope again. I've been getting all these cool LED lights and the whatnot. I hope you like this one in the back. That's my business. Unfortunately, kind of switches around, with the camera or the whatnot. So yeah, but anyhow, so we thought, what I'm going to show you is, of course, today we had another crazy day. A lot of the trading in these stocks was shut down. Now, first of all, look, people have to get over this. I know everyone now is ranting. It's not a free market. It's this, it's that. But look, this is really common. For those of us who are in commodities, know that if sugar or coffee or anything spikes up on the CME, what they'll do is they will up the margin requirements so people aren't as leveraged and leverage yourself more as the risk becomes greater as things move higher. So essentially, I don't think it's a big conspiracy theory to do this. I think what's going on is that, a lot of people are trading these stocks on margin and the whatnot. And it was just essentially they shut it down. So, because, buying GameStop on margin at, at 200 or 200 or 300 is a lot riskier than buying in a margin when it was 15, right? So that's really kind of what was going on. And I think people need to really kind of understand this. And look, yeah, maybe they were in there doing something and the whatnot and this and that. And also too, what do people expect? Don't people realize this is the way it works? And I've ranted a million times about how in 2008, no one went to jail. I've been against when a lot of these conservative figures and Trump got booted off Facebook and Tesla, because we have a kleptocracy. We have an oligarchy. We have a bunch of people in control. So yeah, maybe they are out there doing this, but also too, it's like I said, these people are not holier than now at Reddit or the whatnot. That's one thing I don't like, that they're being painted as these quote unquote Robin Hoods, of investing and, putting it to the fat cats and this and that. No, man, these are the tulip bulb traders of 17th century, 17th century Holland. Because GameStop, BlackBerry, none of these companies, based on their revenues, their profits, etc., were worth of what they're trading at, right? For a perfect example with BlackBerry was, sorry, let me go get the financials. Like BlackBerry last year, you see 2019, 2020, had about $1 billion in revenue. Well, it's trading at an $8 billion market cap now, when it was at $30 kind of at its peak. It was trading a $16 billion market cap. It was trading at 60 times sales. They don't make any money. So to act like, this is again, this is not finding value. This is the opposite. This is just madness going on. And you can, none of us like these hedge funds, and none of us really have any love for Wall Street. But to act like this is kind of price discovery, no, this is the opposite of price discovery. This is tulip bulbs, right? That's essentially what this is. And people talk about, I hear that now, this big, this BS, sorry, that's what it is. It's BS being thrown around, that, we're decentralizing. People have just as much access to information as the Wall Street guys, blah, 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 blah. Sorry, I don't buy that. Whatsoever. I don't buy that at all. I think that's a bunch of nonsense, etc. So we're going to share the screen here for a second, and show you a little bit what we're talking about. So there's Fizz yesterday. Oh, that's my video from yesterday. What's going on here right now? Okay, perfect. Yeah, so so BlackBerry, yeah, like I said, I mentioned a few of these things. Look at this right now. This is Express. This is another one. Again, this is the opposite of this really is. See, and what they used to do in 1929, and the pros did this, not the Reddits of this time around, is that they used to actually, they had stock pools and they would get a stock and they would manipulate the price of the stock higher and then dump it to their clients. So this is no different to what's going on in these message boards. And I think that's the one thing being lost is, and this is just all a symptom, cheap money, bubble psychology, etc. I think most of you agree with me. I had one guy ranting at me, calling me an idiot because I tried to short Netflix 5 years ago, which I did look at. And that, by the way, that's one thing I want to talk about shorts and trading. And a lot of this is luck. In 2015, I did a lot of fundamental research trying to short stocks. I really thought the market was a bubble back in 2015. The Fed looked like they were about to start to raise rates. I thought that could potentially burst the bubble. We did get a very good size correction from the summer of 2015 into January of 2016, but nothing really collapsed, etc. So I was wrong. I admit I'm wrong. I'm not, I don't have a big ego about it, but I did so much work, and I thought it's probably some of the best work I've ever done. But now I bought a bunch of deals that I bought deals on my own that are outside of gold and precious metals, and a couple of these has spiked 5, 6, 7 times in the past few weeks, and I made a lot of good money on them. And I exercised my warrants, and I sold some of the stock, and I made money. And I didn't do anything. I just bought these deals. I was like, you know what? I'll diversify myself. Bubble hits. These deals spike, and I didn't do anything, and I wasn't smart. And that's what's going on with these Reddit people. These Reddit people are lucky, and most of them are going to pile their money back in and lose anyhow. Like, I'm sure if you got in, we're part of the pump, sold it when it was like over 300 yesterday, and that's it. So, and it really has become like a casino. And cheap money is all, and I mean cheap money in every way. 0%, the Fed printing trillions, inflated unemployment insurance benefits, all this sort of thing, this sort of thing, and that's what's going on right now. So let's look at the markets today. I really still think we're topping on the markets. If you got my email today, I think hopefully today you could get in some of those puts. You probably got better price than me because I did them yesterday in the morning, before the VIX kind of spiked, but it was still, the VIX did come back down, but we kind of look at the market, it faded a bit today, and it was good because it got some of the volatility out of the market. The VIX still closed at 30, but not nearly as high as it was before. And it got some of the froth, and then some of the stocks we talked about shorting. This is Etsy, was up $9 today. Microsoft, I think, actually was up pretty good. It was up 6. You can see looks like a bit of a reversal, maybe a reverse candle. And I don't think ARK was up very much because Tesla was down in earnings. Yeah, ARK was up 2. So I think you got better prices in on your shorts. One trade I'm looking at making is some maybe call options on the QID. So this is the Nasdaq 2x thing. I'd probably maybe look at the Julys, because I really am looking for a big drawdown now in the next 6 months. I really think what has now happened in these stocks is the absolute let's look at this thing here. Like, look at this is happening all over. I don't even know what this thing is, Kango, right? We're just going to pick these random stock, the biggest percentage gainers. Ren, Ren, I don't know what these things are. That thing actually looked like it'd been holding up okay. We actually own some First and Majestic. And why did it go up? Not because First and Majestic is a good company, but it went up because it's the most shorted of the silver companies, Hekla too. There you go. Hekla, which had been performing pretty poorly for the last, few weeks, was up 17% today. So it's just like, let's look at the percent downs, because there's AMC, there's GameStop, the big ones, BlackBerry, Revlon, bad day for women's makeup, I guess. Lumen. This is like these kind of pump and dumps. This reminds me of 2000 so much. This is a total bubble. And like I said, I somewhat benefit from it. I had like these small positions in some non-gold deals, like, and I know some of you are in them. Like, look at, and these are companies actually I think are good companies. You know, Plymouth Rock has got a nice little drone technology, a couple small contracts, you know, but look at this pumping it, right? So, and you can never get the top. I sold the Plymouth Rock at 60. So what I did with Plymouth Rock, for those of you unaware, I exercised my warrants. I sold at 60. And then what I did was I rotated some of the money back into, they did 20-cent financing back in, they announced it at the beginning of the year when you can see that the stock was just over 20. And I put some into the 20 cents. Now I got a 4-month hold. Well, if Plymouth Rock pumps and dumps, whatever, I'll probably break even. But, you know, maybe it will hold up and I can double or triple my money, etc. You know, and then Mountain Valley, which they got an amazing technology where, you know, when you do the Listerine strips, they have a technology where you can actually put those strips on your tongue and then take a medication or a vaccine like the COVID vaccine that way, rather than, you know, an injection or pills. An amazing technology, and they can flavor the strips just like a Listerine strip is flavored, you know. So an amazing technology, and but they're in the early stages of it, and I own some of this, and you can see the absolutely huge move on it, right, in the stock right now. But like, you know, like, do I really want to be holding it up at these kind of levels, right? Probably, and not, or just a small position, and that's it. And again, these are good companies. Like, I like both those companies, but that's how I benefit. And I didn't do anything. I just bought a couple of these placements, and then the bubble happened to hit. That's what I'm trying to tell you. When a bubble hits like this, a lot of it is just luck, you know? So sometimes it's being at the right place at the right time, as they say, you know? So, anyhow, yeah, look at this thing. Build a bear. Oh my God, build a bear. So this is a thing where you, like, it's like a toy thing. You build a bear. You know, look at this thing, you know? So absolutely, this is just insanity what's going on right now. So anyhow, and supposedly still the next Reddit trade might be, hey, if they benefit me, fine, I'll go with it. The silver, you know, we saw the SLV up 5% today. You know, I recommend, actually, in the middle of the day, some of the premiums came out of the calls. So, you know, I recommended some of the calls. I own 5 of the September 27s. So if you wanted to do that, hey, why not, right? If the Reddit traders can pump silver to 40 or 50 bucks, let's be a part of it, right? This would be trading at 45 bucks. Our 27s would be trading probably at 20 bucks. You know, we'll make, you know, 6-7 times on our money, right? So why not? Let's do it, right? So anyhow, that's just another thing to do here. That's just a small trade, but mostly I'm looking at hedging. I'm looking at raising cash. I bought a little more of the QID today. And I recommended that in my email. You know, that's a nice little reversal too here. I still think we're topping. And I just think, I'm not a guy who's going to call for a crash every month, but with this being so extreme in kind of what's going on in the markets, right? In terms of the psychology, these stocks that I've showed you, the Build-A-Bears, that, you know, look at BlackBerry for a second. That is the classic bubble, you know, sort of blow off that we've seen. So, you know, I just think that this is kind of the end game. These are tulip traders, Reddit people, okay? They're not taking on Wall Street. They're not fighting anybody. What it is they don't know anything. And I don't care if people get pissed off for me saying it. These are jackasses. They are idiots. They don't know anything, okay? And they just happen to get this perfect timing of cheap money. They did find these stocks. Congratulations on them for that. I'll give kudos where kudos may be. They did find these stocks with huge short positions at a time when there's tons of cheap money and it's easy to move stuff. And they took advantage of it. So congratulations. But what used to happen in the tulip mania is that they had bars in Amsterdam where they would trade in the bars and the restaurants. And the people would tell each other, you know, or talk to each other, about what stocks they thought were going to move and which ones weren't going to move, and or sorry, which tulips, or sorry, the tulips and this and that, the quality of the tulips, all this stuff, and they would trade back there. And that was your message board of the 17th century. That's Reddit. Okay, that's what's going on now. So, you know, I'm sorry, I'm a party pooper. What can you do? You know, I'm actually a lot of fun if you hang out with me. But yeah, there's a time to call it like you call it, you know. So yeah, I guess that's about it for now. I'll talk about gold and gold stocks. Yeah, it's 4:54. I have to do another interview with which I'll post to my website again. But anyhow, I hope you enjoy this. I've shown you a few things. I'm going to look for. I still kind of like the idea of shorting KMX. You can see again, the big spike, kind of reversal here, maybe potentially topping pattern here. So we'll see. And the nice thing about shorting KMX or Microsoft is they don't have the premiums that these tech things have in them, in terms of the put premiums. So, okay, I'm just going to leave it at that. And I hope you like my sign. It costs enough money. Yeah, I hope everybody takes care and enjoys this.